Hey everybody, this is Ray Halstead and Andrew McMillan with REH CPA. Today we want to talk about health insurance subsidies. As we're coming up on year end, it's really important to understand your tax liabilities, and those folks that have health insurance subsidies really need to understand how their income can affect whether or not they may have to repay that. Andrew, what can you tell us about health insurance subsidies and their tax return?
Yeah, so we've been dealing with this for a few years now, and it's always good to go through another refresher with our clients, because if you get your health insurance through the marketplace, through the government marketplace, one of the things you have to do in doing that is estimate what you think your income is going to be for the coming year. Because by doing that, then the government figures out how much subsidy you're eligible for to help you afford your health care during the year. So you figure out what your estimated income is going to be, you potentially get a large subsidy, and then when your tax return eventually gets filed, that's when a reconciliation is done and you determine if you were eligible for that entire subsidy that you received during the year, or if you were not eligible for it and you potentially have to repay some of it, part of it, or all of it. So it's really important for people who are on the government marketplace for their health insurance, and if you are receiving a subsidy, to understand what your estimated income was that you used and see how close you are to it for the year, to make sure that you don't get a situation where you have to repay your health insurance. Because I tell you, we've had many times clients get health insurance and not realize that they were receiving $15,000, $20,000 in subsidized health insurance, and came tax time, they had to repay all
It's always
of
a
that.
bad conversation, and the ones that haunt me is where, somebody normally is under the threshold and wouldn't have to pay their health insurance, but they sold something.
Yep.
Like they sold some stock and had a big gain in 1 year, and they didn't think about it, and it triggered them. Like, you go over just a little bit, and it triggers it to repay like 20 grand in taxes.
Yeah.
I mean, that's just heartbreaking. Not taxes, but 80 or 20 grand back in subsidies, and it's just heartbreaking. So yeah, it's definitely important to understand that.
Yeah, because there's been some misconceptions we've dealt with in the past where people thought, well, it's only on my W-2 income what the subsidies based off, but that's not true. So all your small business owners who have pass-through income coming into your tax return, that income's going to be included. That land you sold in February that you've forgotten about, that income's going to be included. It's all of your taxable income for the year from all sources.
In fact, it was a lot of the people at the marketplace, they would talk to clients and just say, well, what's your W-2 wage?
There's some bad advice given, for sure.
They would only take the W-2 wage. They wouldn't even ask them about business income or anything like that. So
we've kind of dealt through a lot of like the initial battles and wars with this, because it's been around for quite some time now, but I tell you, every year somebody seems to get caught. So
just be aware. Awesome. Well, really good information, Andrew. If you guys have any questions on your health insurance subsidies and how that might affect your tax return, feel free to give us a call and we'll help you out. Thanks.